Hello and welcome, ladies and gentlemen. I'm Nirmal. We have with us Kunal Shah, Head of Commodities Research, joining in. Kunal, to start off with regards to crude, you have the US crude inventory data that has come in, and that's actually shown a rise. What does this data actually mean, and how could we actually relate it right now to what's happening with crude?
Yeah, so I explained last time, what happens generally with the way crude oil prices have moved up, either from the OPEC member or from the non-OPEC member, they'll start producing more. So US oil production in the month of May has declined to 10.5 million barrels from 12.1 million barrels. So almost 1.6 million barrels of crude oil was out of the market. Now, what has happened yesterday in the EIA data? The production of US crude oil production moved up from 10.5 million barrels to 11.1 million barrels. So suddenly 5 lakh barrels of production increased. Uh, why? Because the prices increased. So now there is a one clarity. Every time prices goes up from here, the production, US production is going to also respond. And same way, even the other OPEC members. So if I'm the oil producer, and I cut my production when prices were at $10, $15, and now prices are back at $40, then why should I, stick to the quotas? So each of these OPEC members are likely to, going forward, slip from the quota. And I think oil, we've seen the upside, whatever upside we've seen, 3100 for the time being seems to be the top, and it should not go above that. And I look to sell crude oil, around 2900 or even if 2870 sort of levels, and again it can go down to 2750, 2710. So oil, I think it has bucked the trend and it can go down. So spike can come, but I think we are not going to see oil going above $3100.
Right. And with this, Kunal, if you think about the number of cases, especially with regards to US, China, Latin America, as well as India are concerned, that's something which has been still showing us an increase, or there are some places which are still saying that probably there is a second wave that has started to come in. Now, if you have to look at all the storage facilities across the world, which are almost full, and if there is a second wave of the pandemic that hits demand, do you think, number one, there will be struggle to cope up with the unused oil, and if that happens, what's the kind of impact are we expecting then?
Okay, so now IMF yesterday came up with a forecast, very gloomy forecast. So it has downgraded the global GDP growth quite sharply, including India's growth. So emerging market and developed market both are likely to experience a sharp slowdown going forward. That is what IMF expects. Why? Because of the resurgence of the COVID-19 cases in US, in South America, in some part of the China, but majority it is in US and South America. So now the problem is what the governments will do if the cases increases. So far they pumped so much liquidity and try to prop up the markets, but the real economy remains very grim. So the job market is looking worse from here onwards. So it seems that we are in a big crisis right now. So forget about the stock markets and
Correct.
prices right now. But I think this is a very big crisis. It's a very, very big economic crisis. So if there is another 2-3 months of COVID-19 surge in cases, and if there is no lockdown in place also, how we are going to contain this crisis? So I think considering all of this, we are slowly entering the risk of mode again. So on one hand, we have liquidity, but this news will not encourage speculators to go long aggressively. So there can be some upside, but broadly speaking, I think till we have a clarity of medicine, vaccination, I think now again the COVID-19 should start bothering the market.
Right. And with this, if you see in terms of the inventory data as well, one point that I noticed is that gasoline inventories have fallen. What does that suggest? And do you think there is something over there in terms of a trade?
Yeah, so gasoline inventories are down mainly on account of the lockdown is open and the gasoline demand is back in US, but I don't think so. It should be a major worry because the production is also moving up, and when the refiners do more and more refining, I think slowly and gradually the inventories will start building up. So not should not be a worry.
Okay, but any trade that emerges over there?
Gasoline, no, we are not trading gasoline, so no trade. It's not traded on Indian exchanges.
Okay, all right. And anything with regards to natural gas, Kunal?
Natural gas, it looks bearish to me only. The fact remains is that the demand of natural gas from the industrial front have remained weak, and the demand, the storage is pretty high. So last week when we had an inventory, the inventory was slightly positive, but it could not last. So I'm not very bullish, and I'm expecting that natural gas prices one should sell the rallies, and the trend is down 120 and breaking of 120. You can see again 116, 17 kind of levels.
Right. And with this, if you have to talk about gold and silver, Kunal, there is a major disconnect that's happening between gold and silver prices. Because if you see the gap between gold and silver, that's actually only widened in the last couple of years. Uh, do you think there is a possibility from here on as well that silver still has good room to play the catch up rally?
Okay, so now gold and silver, it's a very interesting thing. Gold and silver, the fundamentals are very bullish. But now, if one notices what is happening in gold and silver, that in spite of all the bullish news possibly available in the world, they are not able to move up and take off that $1,800 psychologically. So uh, I personally feel that somewhere in the short term, I maintain my view that prices may find difficult to move up immediately because the demand from East is very weak. Demand from India, demand from China is very weak. The only ETF demand is something which is driving gold and silver prices. So I'm again giving a contra call 48,300 good levels to short. 48,600 should be the stop loss. Please stick with the strict stop loss. My view can go wrong. So in that case, stop loss should be placed, and I'm expecting 47,700, 47,600 for gold in the short term, and same with the silver also. It is likely to remain under pressure. Sell the rallies. That is my views.
Right.
It's not now.
And right. And with this, I think a lot of central banks, especially if you have to talk about, say, Russia, Turkey, China, they have been constantly buying a lot of gold. And I think that's something which is actually probably building the investors' confidence too. But with this, if you have to look at base metals, Kunal, right now, any good strategy for today?
Yeah, so base metals, only because of expiry, it can go down a bit. But base metals, my view is not very bearish. The same reason, the production cuts have been pretty aggressive. China, which is the core to the base metals demand, 50% of the demand comes from China. China is not doing bad, not doing extremely good, but as compared to the world, China is really doing well right now. So the demand is also robust. Production cuts are already in place. So trading perspective, I would recommend to go short in copper 553 and expect prices to go down at test levels of 446 to 445 for the farm and contract. And as far as long-term view is concerned, I'm not very bearish on copper.
Right. And what's the sense that you have with regards to where nickel, zinc are concerned? Because both of them, if you see on the price perspective, there is some bit of consolidation that we are seeing.
Yeah, so nickel is looking bullish, mainly on account of the supply side bottlenecks and demand not robust, but supply side is not that strong. Zinc also looks relatively bullish, but uh, I don't recommend to go long at these rates. Some correction can be witnessed going forward. So I'll recommend for the trading for today's session or perhaps till tomorrow morning, one should short zinc and expect it to go down till 159 to 158.
Right. And any view with regards to where the dollar index goes, Kunal?
Yeah, dollar index is yesterday moved up, and that's the reason why gold and silver, in spite of so much bullish news, it came down. So today also, I think dollar index is likely to remain up. and that is going to cause some problems for dollar index, and it can go up. But if you ask me what is the broader call for dollar index, the way money has been printed, dollar index ka eventually weaken is very likely. It is eventually going to weaken sharply. So my view is that dollar index भी थोड़ा बहुत ऊपर आ सकता है, but it's not looking that very 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 bullish. Another thing, I saw a question from Anup. I think what is the view on USD INR? So just combining this thing. So like we discussed last week, 76.45 it should hold on 76.7605. Today it is 75.70. So don't aggressively short here. 75.60, 55 buy, 75.85, 90, or perhaps even 75.95. These kind of level you can see. So I'm giving a buy for 25-30% upside in USD INR, but 76, 76.10 again short, you will get it somewhere at 75.10. I'm not expecting it to go to 77 right now.
Right. In fact, Kunal, on this, a couple of weeks ago, there were a lot of conversations that were going around that don't be surprised if you see the rupee around 80 to the dollar. Do you think that is a vague possibility as well? Because number one, there has been a growth downgrade that has come in for India by the IMF as well right now. And if there is persistent increase in terms of COVID cases, do you think this combination could actually lead us to 80 to the dollar?
Uh, Yeah, I personally feel that in this kind of market, anything is possible.
Mm.
The way things are placed. So if COVID-19 is really picking up in India and the lockdown extends, so like we saw Tamil Nadu saying that they are going to extend the lockdown. So in same way, if other states also join them, so how a growth can resume in a lockdown? So the businesses and the shops may open, but the
Right.
economic activity can never become the way it used to be before COVID-19.
Mm.
So overall directional view for rupee, it can test such level 78, 79, what going in slightly longer term. The significant appreciation is not expected. It is only expected when dollar index, goes to 90, 88, those kind of levels. So at that time only rupee can decline to levels of 73, 72. Otherwise, it's not going to happen.
Right. So that's with regards to where the dollar goes, base metals, crude, as well as the strategy for gold and silver. I think we've answered the questions that have come in. Thank you, Kunal, for joining in. Thank you, participants, as well. We will come back to you now on Monday with more strategies as well. Thank you so much.